I'm Matt Bichard with REIT.com here in Chicago for REITWeek 2013. Joining me for this CEO Spotlight is Drew Sims, the Chairman and CEO of SoTHERLY Hotels. Drew, thank you so much for joining us.
Thanks for having me this morning.
Well, obviously the big news for your company this year has been the rebranding from MHI Hospitality to SoTHERLY Hotels. What was the driving force behind the change and how's it going?
Well, it's going great, and the reception from the investment community has been very positive. Our company traded for almost 55 years as MHI, and my father founded the company back in 1957. So there's a little nostalgia involved in changing the name, but we've just finished a complete restructuring of our balance sheet, and we're about to go back on offense, and we've kind of redirected our expansion efforts to the Southland. So we thought that we would try to find a name that more clearly reflects what our mission's going to be for the next decade.
And you've said that you hope to expand the company's footprint in key southern markets. What are those markets and what are the plans?
Well, I think probably the most important market for us is Atlanta. We have hotels in Tampa, Miami, Jacksonville, Savannah, Raleigh, Wilmington, North Carolina, Louisville, Kentucky. And those markets are fed out of Atlanta, so we feel like having a signature hotel in Atlanta is a must for us. So that's going to be our first stop, and then after that, we're looking at markets like Houston, Texas, Charleston, South Carolina, Charlotte, North Carolina, and others to follow after that.
And there are positive signs for lodging fundamentals, but what do you see as the biggest risk or concern to kind of maintaining that momentum?
The fact that there's very limited supply growth and has been very limited supply growth for the last 4 years really it bodes well for the future of our industry. We're not seeing a lot of new product, and as a result of increased demand for our product, we're actually in a very good position for extended growth. Our belief is that probably for the next 2 or 3 years we should see a continued growth in rate, and occupancy is already stabilized at a very healthy level presently.
Drew, thank you so much for joining us today.
Thank you very much.
For more on this and other REIT news and analysis, be sure to visit REIT.com.